When the PPP program started, it was a bit of a Wild West. People really didn't know exactly whom they were supposed to approve for these loans. Now, with the second tranche of money coming through and maybe some of the rules being spelled out better, has that aspect to this program receded at all?
It has. It's receded quite a bit. I give a lot of credit to the SBA. They have worked like crazy to come up with exactly what the rules should be, and people are incredibly willing to do exactly what the SBA wants. We just needed firm guidance, and now we have it. So the processing times on these loans has literally gone from, number of days to where we're able to process loans in less than 1 day at this point if the borrower has the package ready for us.
Let's talk about those borrowers. What are you doing to ensure that the borrowers actually qualify under the program? Because one of the criticisms, of course, of some of the loans was that larger companies were manipulating the regulations one way or another to get loans when really they shouldn't have, or that they didn't qualify and were doing fraudulent things to get the loans. How are you making sure that the right people are getting the right amounts?
That's a good question. And let me first say that bank fraud is a very serious issue. And I applaud the prosecutors that are going after the bank fraud. But let me also say that this program, as you pointed out, was like the Wild West. A lot of people were trying to figure out the rules as we go, and we have a lot more rules today than when the program was rolled out 3 weeks ago. So the SBA came out and said it is first come, first serve. Banks, we want you to get the money into the hands of small businesses, and we worked like crazy to do that. And I think there are some people that ideally you look back on and you say, do they deserve the money? Probably not, but they fit within the rules that both Congress and the SBA put out. The obligation to banks was to make sure that you had the certifications from the borrowers to know that, yes, they did have a diminished business, their revenue was down, and they were worthy of these funds to keep their employees employed. And I think that's really what we need to look at is the intent of the legislation, which was to provide funds for small businesses to keep their employees employed for 8 weeks to get through this crisis so they wouldn't have to go into the lines of the unemployment administration.
Yeah, and whether those borrowers actually did not have access to other pools of capital that they could draw on, which must be something that you check out rather assiduously, I would presume. Let's talk about the bank and its operations. You made a profit in the first quarter. As I understand, you paid a dividend. I assume the dividend is secure. You've been paying dividends for, 100+ years, right?
We haven't been paying for 100+ years. We've been paying now for about 35 consecutive years on our cash dividend. We feel very comfortable with that. We have been very active in terms of share repurchases in the past. We've taken a pause in terms of share repurchase. None of us know exactly what the impact of COVID will be on our balance sheets. We feel very secure in terms of our underwriting and the sponsors we have behind our loans. But we need to see what the depth and the duration of this crisis is. But ultimately, I think banks are very well positioned now to be part of the solution. We have a great deal of capital. With the new accounting rules around allowance for loan loss, banks are well positioned to be able to withstand this crisis and be there to be able to deliver liquidity for our borrowers. One of the things you may have noticed on our balance sheet.
My memory failed there. Go ahead.
Oh, go ahead.
Finish your thought. I thought you were done.
Yeah,
no, I was going to say my memory failed me there. It's 148 consecutive quarters you've paid a dividend, not 148 consecutive years. Finish your thought, Brent, and then Melissa has a question.
Yeah, one of the things that we've seen is our borrowers are looking for liquidity on their balance sheets. So what are they doing in these uncertain times? They're calling on their lines of credit to put the cash on their balance sheet to be able to know that they have the cash in the times of distress that are coming to us. So we did the same thing as a bank. We have all kinds of untapped lines of credit. So right before year end, we borrowed over $1 billion for 10 years at a very, very low fixed rate, below 1%, to put that liquidity on our balance sheet for our borrowers. And they have applauded that. It's one thing to say you have the strength. It's another thing to see it on the balance sheet.
Brent, I have a follow-up question on that point. In your last earnings report, you had indicated that 7.5% of loans are identified as quote-unquote high risk. How does that definition of high risk change as the pandemic deepens? And how do you view a high-risk borrower now versus some of the stress tests that you might put into place? For instance, an individual who might be borrowing might have a salary today of $100,000, be asked to take a pay cut or lose their job, and it becomes a completely different story.
Yeah, that will evolve over time as we see how this crisis evolves and how getting back to normal, what it looks like in the state of Washington, where we're headquartered. That's, of course, in 4 phases. The highest risk portfolios we have, of course, now are hospitality, and many of our hotels are just shut down in their entirety. So the key for us to getting hospitality back on its feet is to have business travelers start going again. But we're working very closely with borrowers, and I think that's one of the real positives out of this recession so far. Banks are being very communicative with their borrowers and vice versa, so we know what the issues are. And I think that's a lot of people have asked, why have community banks been so successful in getting the PPP loans out there where many of the larger banks have not? And I think it comes back to relationships. Relationships matter. You need great technology, but you also need to be able to call up a banker in times of distress and ask, what does this PPP loan program look like, and do I qualify or not?